let's just say, okay, I bought this property. I'm going to flip it. I don't know. Something happens. We end up renting it. How would you think about that?
Let's say on an audit, God forbid they go audit, the IRS would say, okay, Larry, when you bought this property, what was your intention?
My intention was to flip it.
Okay, then they would say you're not doing the 1031. You're being exactly right. But if you have what we call intent to rent, right? They would say, okay, well, what would a landlord, and this is the way my attorney explained to me over the years. So there's two paths you walk down, the investor path and the flipping path, or the dealer path. There's a couple different titles for it, same thing.
Yeah, flipper,
right.
dealer, right?
Right, it's just like a car dealer, anybody that deals in assets. There's nothing wrong with that. That's your business model, right? But there's activities down each path that you take. The more activities you document down that path, the stronger the case is for that path, right? So I look at them as check boxes. So remember we talked about before, a year of ownership, check that box. 2 years, better, stronger check box. Show rental income. They don't mandate occupancy or rental rates. They're not going to say, hey, listen, as long as you rent it for X period of time, whatever. Because what if it's seasonal? I mean, they just want to show the activity. I said, I wouldn't rent it for $1.
Sure.
You know what I mean? Unless you have some weird municipality contract or something that rent it. I don't know, but that's not the case. So you want to make it look and feel like what a prudent investor would do. An investor needs to get that rented as fast as possible. You know that as an investor yourself. You don't want to let it sit vacant because that's your money right there, right? So what activities down that path of an investor would you do to check those boxes? And if you're not checking those boxes, they're going to be like, I don't know if I believe you. Even though you have documentation showing this or that, it might not hold up in an audit. Or the other side, if you, like I said, you're really flipping it, and let's say it took you forever to rehab it because of supply chain issues and permitting, and
sure, exactly,
a disaster came along, with a hurricane or something like that.
So you're a year deep. You're a year deep into the flip, and now you're like, let me 1031 this.
Oh, exactly. Yeah. Let's play that out a second. Let's say that happens. Because we just had 2 major hurricanes come through and they had extensions as a result. So that means it impacted the market, right? So let's say your intent, you would never say my intent to sell because they would bounce it as soon as they looked at it. You would say my intent was, I thought selling it, but then I said, nah, we looked like the market was going to be pretty strong. We want to rent it out, get some income before we do that. Rental income, consistent, using the property. And let's say we're a year into it. And now, because it's now taken longer than you estimated, let me back up. Let's say you're going to flip it first.
Yeah.
Straight up. Let's say you're going to flip it. And now you estimated in our budget, time budget, money budget, financial turnaround budget, flipping, you need to move them. You can't let it sit there for a year. Now it took a year. Now you're out of budget. You're out of length of time. Now it's a financial hardship. Now maybe not bringing you down financially because you have a bunch of stuff going on, let's say. But now you change your intention to rent. Now you got to show intent to rent, as we call it. What would you do? Sign on the market, sign showing it's on the market for rent, put in the MLS for rent, social media marketing, whatever. And you get a tenant in there. That would be stronger. But if you just show intent to rent and then haven't shown any rental income, I don't know that I would do an exchange on that one. Because anybody could say, yeah, our intention was to rent. And you could bring the argument that says, and this might be okay. You could say, well, it took us, we were going to flip it, but it took us such a year to do that now I can't, I've got to sell it. Or maybe I was trying to rent it, I'm not sure. But because now it's a financial hardship, we have to sell it.
You just want to get it out.
I have to sell it. And I'm going to repurpose it. I'm going to reinvest it. So it's a gray area on that one to do an exchange or not. But if you have enough activities and your team is comfortable with it, defending that if questioned, then you do the exchange saying financial hardship, not a tax avoidance. It's a financial hardship. And we're over a year now, so it's now a long-term asset. We got to repurpose the money. I have to get there. Now, if you're a flipper, you're going to want to get in and flip it again, right? Because now you lost the use of that money that you were hoping maybe get it flipped in a 6-month or 3-month, whatever your time frame was. It would have to be a rental situation. Okay.
You want to sell that asset, 1031 it in this case, if everyone's cool with it on the team, and then buy a rental.
Yeah,
right? You don't want to buy something you're going to flip again.
Right. You can't say, and that's a good point. And I deal with this straight on. When I first was asked this question years ago, when they were flipping crazy back before the market crash, people were like, well, how long do I have to hold it before I can do the exchange? And they're like, I went to the IRS one time and I said, what's the answer? I'm not seeing anything here that documents a holding period, whatever. And the woman said this to me. It was the funniest thing ever. And that's where I got the concept. She said, Drew, you could buy a property at the beginning of the month, go through the motions, like I said, that path of what an investor would do. Sign on the market, for rent, taking some rental applications, maybe you sign a deal, and then somebody knocks on your door and gives you a crazy offer for that. Way more income than you could make for renting in a couple of years. So now you're looking at the financial side of this and say, actually, I can make more money on the sale that I didn't expect. It was unsolicited, unintentional.
You've said that you've used that word unsolicited offer before,
Correct.
right? I've heard you say that.
And that's where it came from the IRS when I talked to her. She said, you could change your intention at a month of ownership. So I ran that back to my attorney right after that. I'm like, you got to be kidding me. This is unbelievable. And his comment to me was classic. He said, technically, yes, you could do an exchange in that scenario on a one-off scenario, owning it 1 month. He said, but I would document the living you-know-what out of that and make it extremely one-off, and I would not do another one that year. Like if it's a one-off, it's got to be a one-off.
Yeah.
And you're also taking the risk that they don't believe you.
Every month you're getting unsolicited offers and 1031ing. That
Exactly
doesn't work, right?
Yeah, well, hey, it all legitimate. Here's all my documentation. Yeah. I have my broker showing me the numbers.
Not cool.
But exactly. So, but in that case, we've had a situation where a guy bought a property, could not rent it for 6 months, and he didn't have a lot of properties. Now this is definitely financial hardship. He can't carry that property. He wasn't buying it to carry it. It was supposed to carry him, or at least its own self, right? In that case, we did an exchange one time. They owned it 6 months.
Okay.
CPA was on board and the realtor was on board because the realtor said, yes, here's all the proof of us trying to rent this.
Here's the MLS listing.
Exactly.
With the rental.
We're not getting it.
Yep.
In that time, maybe the market shifted at that moment, something happened. That's why the broker critical, because you're pulsing the market, right? And then we sold it and we repurposed the money. So it was a problem solved, not tax avoidance.
Last comment on usage, and then I have some more interesting questions for you or scenarios for you later.
Right.
But land, let's just talk about land. How does that work? How should I think about if I'm investing in land?
So
I'm
great
not
question.
Rent it probably.
Right.
In
And
some
land,
cases.
unless it's agricultural, you might not be able to rent it out, let's say, right? And let's say you can't rent it. You're holding it for a future investment use. What that means? Well, it depends on you. Maybe you're going to develop it. Maybe you're going to hold it to sell to a developer. All right. The key is that you're not selling it as a flip. Number one. And number two, you don't want to become a dealer. In other words, you don't want to say, and this is where it can be gray area as well, but again, having the team will get you through it. Let's say you bought a property and you want to develop it and maybe put a rental in there, okay, as a rental property on your own. Because you can, that's the most cost effective. You have to be patient with the time and all that, but buying it wholesale like that and building your own house, right, whatever. And let's say it takes you a year or two to build it. And now you're like, man, I just want to sell it. I don't want to rent it now because I got to get that money back. It took me longer, whatever. Little bit of a gray area because are you a dealer? But you're not an investor because you didn't rent it out. So I would tell somebody if that was the case, I would try to get some rental income there. Because if you're going with the path, down that path of an investor makes their money by renting it. They need to use the property to make money. They're not trying to get rid of it. It's an asset that they're using to produce income. So why would you get rid of it, right? So that's how the IRS looks at it. It's not that flipping's bad. It's not. There's nothing wrong with it. But if you have to sell it to make money versus I need to hold on to it to make money because that's my rental income every month. Why would you get rid of it so fast? So that's how they look at it, right? That's why they tend to be a longer hold than anything else. So if you had it in that case, let's say it took a year or two to build it. Let's say it's a bigger property, whatever, commercial, residential, doesn't matter. But you never rented it. I don't know that I would do an exchange on that. I mean, not saying we haven't. Probably in the past, somebody had a one-off scenario. But that's with caveats and the team conversations. And I tell them, listen, it's not our job to be, to be a judgment on what you're doing or pass judgment or anything like that at all. We're educational. That's it. I'm educational, give you as much option as possible. But I don't want you to do something without being, eyes wide open, going into that, what could happen, and have your team check those boxes. And that's where I think it's necessary to have those conversations, even when you're in a gray area situation.
Sure.
Sometimes things are going to be gray. To you said, have the confidence and the faith in your team to do it. You're not trying to get over on the government or IRS or something like that. You feel legitimately that this checks the boxes and you can defend it with these XYZ activities. I say go for it. Because that's what it's all about. It's not just some situations are definitely cut and dry, without a doubt. But there's some cases where they're not. Things happen. And I said, you have to do your best guess of the facts at the time, and your activities document that. And that's where we're at.
So if you buy just a piece of land, you don't do anything to it, you just hold it, and you hold it for a year, 2 years, and you want to 1031 that.
You could do that.
Feel good about that.
Yeah, I feel good about that because there's some time now.
Yep.
And the land is definitely, like I said, could go a lot of different directions, but
sure.
You might be, example, let's say you find out there's an Amazon distribution facility going to go on. So you buy that land up, you're going to hold on to it because they might need that land.
Yeah.
That's a great investment, right? You buy it cheap because nobody knew, or you didn't know maybe. And out of the blue, Amazon announced they're going to put a big facility there and your value just went up.